Hey traders, it's John Fortune here with this week's weekly Forex forecast for the 24th of June to the 28th of June 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a great weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we were looking for further declines to the downside in the dollar index, and we highlighted the 97.72 for you all over here as an area to start to look for further declines in the dollar index. We did turn at the 97.72 almost to the point, and we had this really fantastic sell-off to the downside in the dollar index and correspondingly in a lot of the dollar pairs as well to the downside. So this was a really nice move. Going into next week, we are looking for further declines still to the downside in the dollar index. We came just shy of our target set from last week from the 97.72 down to the 96. So we are looking for this to complete next week. Anyone who was in this or involved in the dollar pairs from last week, we're looking for this to complete the target from last week at 9600. If we can get a pullback, probably after we've actually taken this target out to the downside to 96, if we can get a pullback, and preferably if we can get a pullback and a retest of broken support turning resistance at 96.61, this once again will be a great place to start to look for bearish formations and patterns. And we're going to be looking for further declines to the downside in the dollar index. First of all to the 9600 if we don't take it out here before correcting. But if we do, we're going to be looking down towards the second key area of support to the downside and target 2 at the 95.16. So the next market we're going to look at is crude oil. Now we start the week above a key area of broken resistance from the past, looking to turn support at the 54.59. If we can get a pullback in crude oil, and as always, if we can get a pullback and a retest of broken resistance turning support, this is going to be a great place going into next week to start to look for bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this market, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 60.65. So next market we're going to look at is euro dollar. Now last week we highlighted the 1.12120 area as a place to start to look for further advances in the euro. We did have a little bit of a breakdown below it, but we rallied from this area. We had a really nice move in the euro dollar last week, and we came very close to approaching the target set from last week at the 1.1389. So going into this week, we are looking for further advances to the upside in euro dollar. Because we're very close to approaching the target from last week, and because the bigger move has already taken place from last week's forecast, we are looking to go into this week for a correction and a pullback towards the 1.1212 again. It's very unlikely that we come all the way back and retest this because we've already had the bounce, but any pullback in this area is going to give us another opportunity to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the key area of resistance to the upside, the target set from last week at the 1.1389. And if we can get a break through here, or if we just break straight through here like this, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 1.1447. So next market we're going to look at is pound dollar. Now we start the week above a key area of broken resistance from the past, looking to turn support at the 1.25660. If we can get a pullback, and preferably if we can get a pullback and a retest of broken resistance turning support at the 1.25660, this will be a great place next week to start to look for bullish formations and patterns. And in fact, it would also give us this pattern here of what's known as an inverse head and shoulders. And if we can get this kind of price action going into next week, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 1.2865. So next market we're going to look at is US dollar Japanese yen. Now last week we did finally get that decline to the downside after this 2-week correction in the US dollar Japanese yen because of that sell-off in the DXY. We had this decline to the downside. It was a really nice move, taking out the target at the 107.32. So very simply put, going into this week, we are still looking to trade in the direction of the overall structure, which is to the downside. We're looking for further declines in the US dollar yen until this reverses. So very simply put, if we can get a pullback, and as always, if we can get a pullback and a retest of broken support turning resistance to the 108, 180, this would be the best place to start to look for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to look at initiating shorts down towards the next key area of support to the downside and the target set at the 106.10. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 105.61. So the next market we're going to look at is Aussie dollar. Now, in the Aussie dollar, we are still structured to the downside, which of course, if you have a weak US dollar, any moves to the downside would actually be a weak Australian dollar and a stronger US dollar. So first and foremost, what this is showing us that the Aussie dollar is actually a very weak currency. But the second thing is that we are still structured to the downside in Aussie dollars. So there is no real opportunity for us to look for long positions yet until we get a reversal in the Aussie dollar. We do not want to be involved in the business of trying to pick tops and bottoms. So very simply put, in the Aussie dollar, we are still looking for further declines to the downside as the higher probability move, because this is how it's structured. We can use this information in a number of ways, but essentially one way, because I always get asked, well, if you're bearish on the US dollar, for example, why are you looking potentially for further declines in the Aussie dollar? Well, first and foremost, it will be because the Australian dollar, even if the US dollar is weak, the Australian dollar, if it's weaker, will still decline to the downside against it. But you can use this in a number of ways as well. I mean, for example, we had a big sell-off in the DXY last week. It may be the case that we actually get a bigger correction in the dollar index, in which case, if we do get that, we would see a strengthening, near-term strengthening, and we would see Aussie dollar rolling over to the downside. So that is one possibility in where we could see this. Despite we have a weak dollar, we could see this rolling over to the downside. Another one is something we go through with TFT members, something like a synthetic hedge. You can use these against the other positions that you're looking to take in dollar index to the downside, for example. So there's a number of ways we can use this information, but very simply put, in terms of how we're structured, if we can get a retest next week of the 0.6945, this is an area we're going to start to see, and we need to see a reversal take place first. If we are looking for shorts, we're not just going to sell at this area. We'd have to see a bona fide reversal in this area. But if we do get that, and for example, we start to see a deeper correction in the dollar index, this is an area we're going to start to look for those bearish formations and patterns. And if we get those bearish formations and patterns in this area, we're going to consider initiating shorts down towards the next key area of support to the downside and the target set at the 0.6830. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 0.6750. Now, if your bias is to the downside in the dollar index and you view this as a higher risk move, there is nothing wrong with just sitting out the Aussie dollar and waiting to see if we get this reversal to the upside like we had in a number of the dollar pairs recently. The next market we're going to look at is New Zealand dollar. Now, like the Aussie dollar, we are still structured to the downside, so we do not want to try and pick a bottom here, although we could be in the process of forming a double bottom. This would not be confirmed unless we break the 0.6680. So going into this week, we are still structured to the downside, as I said. So the New Zealand dollar and the Aussie dollar actually become somewhat plan B currencies. So if the dollar, for example, does strengthen next week, the Aussie dollar to the downside, New Zealand dollar to the downside would be the go-to currencies that we would look at. But either way, if we can come back and get a retest of broken support from the past, looking to turn resistance at the 0.66130, this is an area we would start to look for potential bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at possibly initiating shorts down towards the next key area of support to the downside and the target set at the 0.6425. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 0.6348. So just to summarize, in terms of the Aussie dollar to the downside and New Zealand dollar to the downside, we consider these sort of plan B pairs, where if we do not get that sell-off in the dollar index, these would be the ones we would go to. We would also need to see reversals in these areas and probably looking at the same time for a deeper correction in the dollar index. However, there's nothing wrong, as I say, if you are just looking for a bearish bias in the dollar pairs next week, to just sit out the New Zealand dollar and the Aussie dollar if you think any shorts in these are slightly higher risk. So next market we're going to look at is US dollar Swiss franc. Now, last week we were looking further declines to the downside in the US dollar franc after this correction. And we highlighted the 1.00090 for you all, and you can see again, this was a fantastic market from last week. We turned almost to the point again at the 1.00090, and we had this big sell-off to the downside, taking out the target set at the 0.9821 and approaching, almost coming down to the second target to the downside from last week at 0.9716. So this was a really good move last week. We're looking for further declines to the downside in the US dollar Swiss franc. What we'd like to see before taking out the target here, for anybody not involved from last week, if we can get a pullback, and preferably, as always, if we can get a retest of broken support, turning resistance at 0.98850. This will once again be a great place to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and target 2 from last week, the 0.9716. And if we can get a breakthrough here, we're going to be looking down towards the next key of support to the downside and target 2, the 0.9635. So next market we're going to look at is US dollar CAD. Now, last week we were looking further declines to the downside in last week's forecast video, and we highlighted the 1.34320 for you. And again, I mean, almost to the pip. In this case, the high over here was 1.34324, so it was 0.4 of a pip above this. And we declined to the downside, having traded into this key area of resistance. We had a really nice decline down towards the target set from last week at the 1.3113. So anybody in this from last week would already be nicely up. However, anybody not involved in this from last week, what we're going to need to see in order to get involved in this once again, if we can get a deeper correction, and we're unlikely to come back and retest the 1.34320 because we've already had this big sell-off to the downside, but any pullback in this area is going to give us another opportunity to look for bearish formations and patterns. And we're going to be looking, if we get this at initiating shorts down towards the key area of support to the downside and the target set from last week, at the 1.3113. And if we can get a breakthrough here, although you can see these are very close, so you could treat this as a cautious target and a more aggressive target if you so wish, because there may not be a chance to actually trade between them. But if we do get a breakthrough here, if you want to take a more aggressive target, we're going to be looking down towards the next key of support to the downside and the target set, the 1.3071. And last but not least, we have gold. Now, last week we were looking for further advances to the upside, and we took out both targets to the upside at the 1366.00 and the 137510 from last week. And we are now, this actually constitutes quite a major breakout to the upside in gold. Whether this will hold or not, we will see, but it looks, based on what the Federal Reserve is saying, that we could very well be seeing a real breakout here. Either way, going into next week, we are looking for further advances to the upside as this near-term rally in gold is still intact. If we can get a pullback, and preferably, as always, if we can get a pullback and a retest of broken resistance, turning support at the 135696, this is going to be a great place to start to look for those bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set, the 1433.50. And if we get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2, the 1480.30. So that is it from me for this week, guys. As always, if you enjoyed this video, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all a fantastic weekend. I hope you have a profitable week next week. The only thing left to say, guys, is take care and don't forget to trade safely.